it can go to the last second, is what I'm gonna say. I will say the last second is going to be
The Bulls have some work to do. We have some work to do over the next couple of weeks if we don't want to start.
all of this is going to be chop and drop. It's going to be chop, pump. It's going to be bull trap, bear trap, bull trap, bear trap, and it's really just liquidity getting wiped up on the market.
I don't know if you subscribe to the monthly RSI theory. Generally, in every market, in every bull market,
You know, the thing that we have to remember is one, we can go from something like 116,000 to 100,000 overnight. Welcome back to another Into the Web3 Verse. I'm here with Toshi. Obviously, most of you may know, and if you don't know, you should know. We're going to be talking about, is the bull run over? So, you know, this is there's a
yeah,
lot of speculation going on in markets right now. Bulls and bears both have their reasons. Toshi, what are you thinking so far about all of this?
it's hard to say. All the content screams it's over. But I'm not so sure. I'm not so sure. That's what we're here to talk about today. And again, I appreciate you having me, man. Happy to be here. Happy to discuss this because we are at a pivotal time in the cycle where decisions will be made, and so we have to position accordingly, right?
Mhm.
Got to
And you
make
gotta
sure we're on point.
play for both games. You gotta play for the bull run. You gotta play for the bear. With right now where we're at, I think it's all manipulation, and I think this is all just people. This is everyone trading. Everyone's trying to make a buck. Everyone's trying to make plays, but realistically, we have no data right now. We had a government shutdown that ended a few days ago. That is still digesting in the market. Entities are still getting up and running in the government that were shut down. We didn't get any kind of economic data over the last few weeks. With all that said, all of this is going to be chop and drop. It's going to be chop, pump. It's going to be bull trap, bear trap, bull trap, bear trap. And it's really just liquidity getting wiped up on the market, is what we're seeing currently. And so that's why if you're accumulating when it's down in red, you're making more money right now because, that's going to come back. And the reason I say all that is it just leads us to that, which scenarios could happen. And Toshi, I know you look into the markets and analysis as well. So, uh, with all of the jobless claims not coming in last month, the CPI, our core inflation datas, and everything else being shut down, we also heard Powell say during this that he's starting to think quantitative easing is over, that they're not going to go into rate cuts in December. And then we also saw on voting markets that there was a 90% chance of a rate cut. I think we're down to like 47% chance of a rate cut now. The funny thing about all of this is we don't have any data to support any of this. So how can Fed Powell have any opinion on whether we should or shouldn't cut rates yet? And I think that's where all this manipulation comes in. The news is spreading a lot of fear and uncertainty in all markets. I think the Dow or S&P was down 300 some points today. So it's not just crypto that's getting hit at this point. It's big tech is getting
Yeah.
hit. We're seeing everything start to sell off. And I think it's all the uncertainty. But with that said, what do you think is going to happen now? So we know we're in kind of a chop manipulation zone because we don't have any data, so we can't get any answers. So, what do you think? What are your foresights and thoughts on whether we're going to get rate cuts, what we need to see to be able to get those rate cuts, and where the market could go either way? I'm going to let you take that one.
Well, I do think we will be seeing rate cuts at some point soon. I'm not going to say December is going to be a rate cut. The market, I mean, Jerome Powell's already come out and said, I don't know what I'm going to do. It could be 50, it's basically 50-50 at this point. Um, and we do know that quantitative easing is going to happen at some point. Um, QT has been going on for a while. And honestly, when we're talking about Jerome Powell, Jerome Powell's days are numbered. I think it's pretty much we've all grown to accept
Yeah.
that Jerome Powell won't be the chair for much longer. And so um, what we need to what we need to do is think about who's going to be next. I know we may not be able to pinpoint that person, but one thing I do know about that person is obviously they're going to be more dovish than Powell is. With that said, I do also believe there's a caveat there that with Jerome Powell having this understanding that I'm not going to be here much longer, he may not. I don't think he's going to go without a fight, and so that may push quantitative easing down the road a little further, and I think he may be even more apt to not cut rates because he knows that his time is limited. And ultimately, that's what he believes needs to be done. And if they're going to get me out of here, why not just do what I feel needs to be done anyway?
I agree with you on a lot of what you said. I think maybe the only thing I would differ in opinion just a teeny bit was the next person's going to be dovish. And
Mm-hmm.
so the reason I say that is one, in my opinion, Powell has a moment right now where he can either go out a hero or go out as a villain or hated. So like, you know, he in my opinion he's going to choose. Like if he doesn't cut rates, it's because he wanted to go out playing it safe and but that's gonna bite. I feel like that would almost bite his reputation more than he already has in some of his decisions. We know a lot of the analysts around the world think that we've been behind a couple months on rate cuts already. So not cutting rates more is just putting us even another month behind everything, in my opinion. And I think that we're going to pretty much know what's coming in December by the end of this week. And the reason that I say that is because of these reports. And I think with the
Yeah.
jobless is almost going to be uh, the main potatoes. They're the meat of the meal
Mm-hmm.
there. We either are going to get those rate cuts off it or not. And I think that if we get rate cuts, bull runs back on. I've also heard some people say that if the numbers came back well enough, could Powell do 50 basis point cut? Well, I think if we saw a 50 basis point cut by some chance, that is a full bull run ignition because all the assets are going to and investments are going to start looking very appetizing to people. But I will also say something else. When you look at the charts of fear and greed, most of the times that we hit extreme fear, it is a very short spike down and followed by a very big recovery up. Extreme fear is very rarely seen on the chart to be there, and same thing with extreme greed. Very short times, but on both of those in history, if you were to be selling at extreme greed and buying at extreme fear, you were making the most percentage gains that you could. It doesn't matter if we're being manipulated in this moment or we don't get rate cuts in December. It just gives you more time to accumulate at a better price. That's my opinion.
Well, 100%. I've been around for a little bit, and I've done a lot of research as well. And there's never been a time the market topped in extreme fear. That's historically never been a thing. That for me has been one of the key indicators that I've always used is just the Bitcoin fear and greed index to be my kind of map to be able to navigate these volatile waters of crypto. And right now, the Bitcoin Fear and Greed Index is telling us it's not over. We're in extreme fear. And then another thing I've never seen is a Bitcoin bull run end without reaching that euphoria stage.
Yeah.
We know retail has not been here. I don't know if you subscribe to the monthly RSI theory, but generally in every market, in every bull market, we always see the monthly RSI hit overbought. It's overheated.
Mm-hmm.
We haven't seen that this time. That monthly RSI has not touched that overbought area on the RSI. And so, I mean, I know these are just a few things, right, that you can kind of hold on to and try to grasp and be like, it's not over. There has to be more. But even going on in what you were talking about, well, I guess I don't know if you said it today, but we've talked a lot in the back channels about extended cycles and the potential of this being an extended cycle. And I have conflicted feelings about that because there's some things that need to be proven. That's why at the very beginning I was like, these next couple of weeks are going to be pretty important because we're seeing some things in the chart that generally line up with it's over,
Yeah.
right? The
The
daily death
death
cross,
cross. Yeah.
the close below the 50 moving average, right? Um, and there's a bearish divergence on the weekly. It's you can't miss it. It's right there on the RSI. And so those things are happening, but that's that's why I said and then also I hate to make another bearish case, but the the post halving year, or no, the post halving year, it's the midterm year. I'm
Yeah,
sorry,
yeah,
the
yeah.
midterm year is generally the bear market. So 2022, I think it was 2014, 2018, and 2022. All of the bear markets started
Yeah,
right
like
4 years apart every single time.
but I can give you
Um,
a kiss real quick. I'm
and
gonna
so there's the time aspect to it as well. There's case to be made for the Bears. There's a case to be made for the Bulls. Who has the strongest case? I think the charts are gonna kind of prove that, right? They're gonna determine who wins at the end of the day. The Bulls have some work to do. We have some work to do over the next couple of weeks if we don't want to start breaking key structure.
One thing I'll say is if you know, to protect yourself, regardless of what happens type situation, um, have something that you're not trading. Have something that is accumulating for a long period of time, and that regardless of your trade days when you're having bad intraday trades, it doesn't matter. You know, yeah, it might hurt or sting in the moment, because it was $100, $1,000, whatever it might be. But if you have a portfolio with 5, 10, 20, $100,000 sitting in it when you're having those tough market cycles like right now, where it's really back and forth of where it could go, you at least give yourself some safety net there of, okay, well, I don't care. My Bitcoin's going to be worth $1 million at some point, and I'm just buying it until then.
How much time do you think we have to figure it out for the
So
market to make up its mind?
yeah, you know, the thing that we have to remember is, one, we can go from something like 116,000 to 100,000 overnight in hours. And so I say that because we had a flash crash recently, and we've had some big pumps that sold back off instantly. And so, it can it can go to the last second, is what I'm gonna say. I will say the last second is going to be the next Fed meeting with Powell. That'll be the
Mm,
too late moment. I think that they can realistically manipulate, drag, talk about fear, excitement about this all the way up until that day of the rate cuts. So I think we have about a month, 4 weeks, let's say, because I think that Fed meeting is probably going to be somewhere around there.
yeah,
So, you know, with that said, that would be too late. I think what we are looking for in those answers to too late is, where's CPI? Where are the jobless claim numbers coming in at? What is inflation data overall looking like as we enter December? And then that will dictate what Powell's going to do. And whatever Powell does will be that moment. So, and I say in the too late moment of this, then if it's a bullish thing and we get rate cuts, you want to be in the market now. You want to have that capital deployed, because you don't want to get caught where rate cut comes in and all of a sudden the or Bitcoin goes right back to its all-time high, soaring to 130, 140, something like that, and you thought we were going into a winter cycle. But also at the same time, if we don't get a rate cut, and we don't make this cycle, this part, then we are most likely going to see more sell-off, and that could lead us into 80, 70,000 Bitcoin range. Um,
yeah,
and so then you don't also want to have all your capital already in a market if you do want to keep waiting for an opportunity. Because if we do collapse and we hit down into the 80 and or 70,000 range, well, that's going to be the best time to really buy. So that's kind of what I'm seeing. Those are the directions I think we could go, up or down, which is the important part, and something I want, Toshi and I are always going to focus on in this, is giving you guys the bull and bear news, because it can really always go either way. If you guys enjoyed the video, please make sure to share it to one friend. Let's take the timeline back by sharing this video out to one friend at a time, or one person we know in this world, maybe someone you don't know in the world, or that doesn't know this world, and help them to understand it a little bit better. It's about trading safe and investing wisely for us to really make that difference. So we appreciate you guys. We'll see you on the next episode of Into the Web3 Verse. Signing off from now, Crypto Stoner and Toshi. We'll see you soon. Later, y'all.